This episode is sponsored by City Traders Imperium. CTI is a prop trading firm looking for profitable Forex traders who need more capital. CTI will back its traders up to $2 million, which is the most in the industry, and thousands of traders worldwide are trading their capital remotely from their own home. It's the most flexible funding provider in the industry, where any strategy is welcome and overnight or weekend positions are allowed. Plus, CTI doubles your account every time you hit 10% net gain, which you can scale up to $2 million. Click the link in the description to find out why City Trader offer the best funded trader program in the industry, or visit citytradersimperium.com. All right, folks, welcome to the Trading Nut YouTube channel. We've got Tyler Malone here, Ty, the FX guy. We've just done a fantastic podcast. You'll find a link underneath the video here. We're about to jump into see a quick screenshot of one of his funded trader accounts before he shows us how he trades the markets and gives us his single time frame strategy, which is something I don't really hear a lot about from guys that are able to achieve a hit rate of over 65%, 70%. In his case, typically it's about 87%?
87.5 is the norm, yeah.
Okay, right. In the funded account statement, you're going to see we don't quite get there, but it was only a short period of time, and so we're going to see that in a second. So, guys, let's jump over there. Ty's going to share a screen, and we're going to see how all this plays out. All right, folks, so here we are back in Tyler's screen. So this is a screenshot that I asked you to provide. Look, it's been an absolute nightmare getting it here. You had to airdrop it from your Mac. You trade from your phone. Normally, you don't use the computer to do your trading, which is fair enough, other than this one here where you've got Trading View. Anyway, we've got the screenshot. We'll try and get a better one. If you can see a better one here, great. But this is what we've got. If you are a funded trader at this place, you'll know what this screenshot looks like, and you can see there, this is the win rate that it popped up, almost 70% win rate, which isn't quite as high as what you normally get, but this was over, what was the period of time this was over?
This was just a month. This was just 4 weeks.
Okay, 4 weeks. So cool. Okay, so guys, we're about to learn the strategy that Ty trades with to achieve this, and the beauty of this strategy, as I mentioned before, it's a single time frame strategy. So anyone that's ultra lazy and doesn't like flipping through time frames, this is the strategy to listen to and learn. So over to you, fella.
Perfect. So basically, it's pretty straightforward. As in the podcast, I told you, I just take 4 hour structure and validations. And so one thing about my entries is I don't look to validate my bias. I look to invalidate the counter argument. And the reason I do that is because, as traders, we will find, 1,001 ways through our confirmation bias as to why we should win a trade. But all it takes is one reason why we won't for us to lose. So if we can eliminate that counter argument, our chances of succeeding in the markets are that much better. So I'll start out here. So I basically use lower highs, higher lows of previous structure to determine, now I'm going to rewind this just so you can actually see it a little bit better. There we go. To determine where my entry points would be. And, we take a look at this structure right here. We're currently, this was taken in on September 20th. We are clearly bearish in this move. All right. And now in my rules, I have three different types of structure. I have your basic support and resistance, which are going to be structural highs and lows on the lower time frame. But on the time frame that we're on, just the 4 hour, they're essentially points where we take profit, but they won't necessarily reverse course. Now, the second are our clearly cut lower highs, which are our structural highs. They don't break previous structure, because if we look left here, we just have this nice bullish impulse. We got nothing to pull wicks off of, but they did form in this downtrend to give us potential reversing points. Now, the most powerful points of structure, and in this case specifically, are going to be my lower highs that actually cruised through structure to the left to create a new trend. So if we look left, we have all these bottoms here. We want to find the last point before we broke these lows here, and that's going to be this bearish candle right here. Now, this bullish candle right here. Why is it a bull? Why is it not this candle? Why isn't it this candle? The reason why I use bullish candles, and specifically their wicks. The last bullish candle before structure broke to the left is because this is where the bulls took their last stand to try and push the price back up before the bears kicked in and broke the structure. So on that logic alone, this price level should be a momentum shifting level. And that's what I'm looking for, momentum shifts based on structural highs and lows. And so if we go left here, you'll see this is a very important, is that a lower high? That's a higher low. This is a very important low. Why? Because this is a bear candle before this bullish impulse that crushed all the structure to the left. So because this was the last bear candle before that happened, when we come back to this point, we're going to need more confirmation to validate a trade to the downside, because it is such an important part. Just like when we get back up here, we're going to need more confirmation than say this high or this high, because this is a momentum shifting point in structure, just like this is momentum shifting point in structure. Now, my confirmation for a trade is simply 2 4-hour candle closes. We have one 4-hour candle close, and then we have another. Now, when we have that invalidates this low here and creates a new high. A lower high is not a lower high until it breaks structure to the left. And that's one very important component about my strategy, is because, it keeps you from getting caught in fake outs. So when you see, a bearish push right here, we have a pullback, and then we have a push. This does not become a lower high until this bottom is broken. Or if we have structure over here that we're trying to break, until that structure is broken. Now, the reason why we do that is because if we have a pullback here, then it starts to turn, and someone says, okay, well, this is a lower high. Well, we risk getting caught in a deeper correction before the next down push. So we want to make sure that we are correctly identifying our lower highs based on previous structure breaks. All right. And this is why we can trade on one single time frame. It's because when we have this type of solid confirmation, we don't have to bounce back and forth. We can just use these structural highs and structural lows to determine trade direction. And then we just follow the rule. We never buy at support we never buy it at resistance or sell at support. We have to wait for that 2 candle confirmation. Now, why do I wait for a 2 candle confirmation? It's all about the time in the markets. All right. If we have one 4-hour candle close below this low right here, well, that's not enough time given the strength of this, because look at how this move began. This began in a huge bullish move right there. One 4-hour candle close isn't going to be enough to invalidate these buyers here. By waiting a little bit longer and having another candle close below it, that should invalidate the buying pressure. But like I said before, because this is a momentum shifting low as compared to just a simple lower high, this is going to need a higher time frame entry. And because as you see what happens, this breaks and we have a new lower high form right here. Price just shoots right back up. And this is where we enter our buy. Now, because we have this 8 hours of information, 8 hours of chances for the sellers to now push this price back down, but it invalidated this lower high here, well, that's enough confirmation for me to take this trade. And so this is where I bought this trade. It's all about invalidating the counter move. And the counter move is the counter move break is right here at this lower high, because this lower high broke the low to the left. Now, yes, these lower highs also broke these lows, but these are lows on current structure. And in the markets, we have to use the past to predict the future. And that's how we get these levels from. And because these only broke current structure, this actually broke past structure. Well, the logic in that is because this broke past structure, this is a much more powerful high that we can break in taking our trade to the top side. So then we enter off that. We like to put our stops 5 to 10 pips below our last higher low. So I'm just going to move this over here. Now, why is this a higher low? Because this is where this impulse pushed to break this high here. And because this is the last bear candle that appeared before this bullish impulse, that means this is where the bears tried to make their final stand before the bulls kicked in. And it's all about eliminating that final stand to invalidate the counter argument. So let me move that down. Let's go. This one only went 5 pips. And I know where this one went, so we're just going to throw it up there. And we're going to watch the rest of the trade play out. We got a little bit of drawdown here. And then we shot off. And this one, so this, it actually just switched momentum yesterday. Or yeah, it was actually at the daily close today that this trade shifted back into bearish momentum.
And you would normally get out at 1-to-1, is that right, for your first exit?
Well, I would close my first. Yeah, I'd close my first entry. And actually on this trade, I actually have my second strategy form right here. And I had 2 entries on this trade. That's my more advanced version, but this is trading at its simplest. This is the one where you do have to go down the 15-minute, 1 hour, and we're just showing the 1 hour time or the one time frame analysis. But yeah, I pull out half my profit at 1-to-1, and then I just move my stop based on structure. So I'm just going to slide this over here. And so if we have, my stop's going to be below here once we break this structure to the left. And then we break this structure to the left here, my stop's going to be below here. And then when we break this structure here, my stop's going to be right there. Then it gets stopped out.
Right. Okay.
And that is, in a nutshell, trading with one time frame. It's all about finding your counter argument strength and eliminating that argument to be able to take these trades profitably and comfortably.
Nice. Brilliant. Well, look, Ty, thank you for coming on the show. This is fantastic stuff. Now, tell the listeners how they can find out more about you.
Well, you can contact me on my Instagram at Ty the FX Guy on Instagram. And then you can also email me at tythefxguy@gmail.com. Either one works. I'll respond to you both.
Brilliant. Cool. Guys, look, thank you for watching this show. Hopefully you got a lot out of that little walkthrough there. If you do want to see more videos like this, or if you even want to see the full episode that we shot with Ty, there are links underneath the video here. Do hit subscribe. Do click on the notifications bell. Click all. Make sure you like the video, and we'll see you in the next one.